miss anything, but I have an inclination that there's going to be not too much that we're actually learning on deep diving, just because it's we've gone very far with that, with assessing ranges and risk. So
here, so you have, you know, your untested hold level from back in this region here, and you've found the 1 minute candles. So that's fine. This is untested. Possibly this could even be tested right here. So we could actually just delete this one and say that's possibly tested right there. This is an untested level. And then, so you're going to delete this level. And then you have people front run the actual level. So the level's 9101 and it goes to 9103. This is common, as everybody knows, people front running levels and looking for entries on those types of spots. And then, you have something like this, not a great level, but maybe it gets hit. Nope. So I actually wonder if there's probably looks like it would be a backside starting maybe here. But anywho, that's fine. So you have these levels, and you would look at this 9100 level here and say 9103 is the level. It's kind of in this weird situation where it's untested. It's clearly the greediest hold level on the move. There's nothing left there that could possibly be hit, right? You go further back in the move. Oops. You go further back in the move, and you're already in these tested levels and regions until you go back a second here, until you go back a little further. And I think you'd actually have to go back quite a bit here to find this next level.
And so this would just be that assessing the risk.
Looks like somewhere in
deep
here,
diving that
right?
risk, right?
So we can kind of
just looking at all the risk assessed pieces of a move and seeing where the different points lie.
Find this level. That's tested. That's tested. That is not 8978. So go forward to this move, and this hasn't been tested. This hasn't been tested. So it's like, okay, what do you do? Because this one's pretty close, right? So you're always going to have people on both sides of the level. You're going to have people who front run the level, and then you're going to have the deep dive of the level. So deep diving a level is quite common when you see a level trying to hold. And say if our level is, and we'll use this 9100, or actually we'll use the 8978 because it's on our screen. Say the level's 8978, level comes down, touches it, kind of sits there for a second, does this, goes right down, doesn't hard close, comes back up. Hard closes kind of over top. If it goes again like this, kind of sits like this, hasn't really hard closed this level yet, showing you that it's likely holding that exact level until you get that kind of moment where you hard close underneath. That's a different story, but this is very common as to where the deeper the level goes, the more incentive there is to hold it. Or if you have a target up top, it's like the same thing. You have, say, we can even just use whatever target is here. Let's find one on the top. So you've got this, that moves to here. Of course, that's already hit. That moves to here. That moves to here. This is untested. And then you do go over top of it quite a bit, right? And maybe even it goes after a deeper level, something up here, maybe. And this is untested. No, it actually doesn't even reach its target. It ends up just being kind of right here. And this is very, very normal for you to have a level and for it to kind of go over it or under it. And you see this all the time on hold levels. You can kind of pick a hold level, like a really greedy hold level, and see it get pushed through, or like this one here, for example, gets pushed through and then pulls right back, right? This one here possibly doesn't get hit, right? It's actually front run the level, possibly a backside here. No, actually, it's just this level is being held over time.
I would say in this move, boy, I wish I could see different time frames right now, but I would say in this move, this right here is going to be one large range. So if you were to risk assess this, it would look something like starting right here. This could be two ranges. It's always an important thing to do. Like if you look at Bitcoin's move right now, even go to a smaller time frame, and there are separate ranges inside these moves, right? Like this range kind of needs to get tested, and then This looks a little too small to be an independent range, 15-minute. You go to the hourly. I believe there's only 2 ranges here. Yeah, I wouldn't call this its own range. And the way you would say, okay, well, how would you tell if there's multiple ranges? At what time frame at what breaking point? So you'd have one range here, one range here. So this can be a combination of different things. So this is something that we're going over actually since we're doing deep diving. Let's just delete this. I'll do it the hard way. That's fine. So there could be different spots in a move that end up creating a different range. And sometimes you simply have what could be an origin level. In this move, it looks like right here, what could be an origin level is dictating one range of the move. So you have scenarios where created an origin level, that's one range. And then there either could be a range above it, depending on the time frames. Here with 15 minutes, I don't really think there's too much we need to do. And then a second range like this, right? So you'd have one range, 2 ranges here. Let's move that one over a bit so it's a little clearer. Actually, I think everybody can see that fine. And then we can go up in time frames one here. Do you have a third range is going to be your question here. So this is fine as one range. You can just delete that right away. Even this is one range there. That's fine. 2 ranges here. Just move this over for a second and you have a third range. Go to your 15-minute time frame. And this is always kind of an exercise I like to do. Not this drawing triangles, but just walking through my ranges and seeing, okay, how much is there actually in this move? And it's, you know, you don't need to walk through it and draw triangles. It becomes pretty obvious when you're charting and you can see, oh, okay, this level was hit here like this. So this one was hit there, which means this hasn't been hit. So there's probably something in here that could still hold the move, because if this body here hasn't quite been tested, but this level has, I would look at this and I would say, okay, you're losing this move when you lose the final piece up here, which is kind of obvious. But at this point, if you've tested the level itself and you're asking if the body can be tested, you're more likely going to be testing something inside of there that's still representing that level being held over time, but maybe not tested perfectly. Like it's not a floating level because this has already been hit, right? So you're likely going to try to test something in there and then hold the level over time, right? And I would see this as this has to have its own range here. And if that has a range, right, like this guy here would be one range. So you're going to go and back test all this stuff in here, right? And that's kind of the one range test. You're going to test the top of it up here. And then the question becomes, can there be a second range in here, right? Like this is one big range with multiple parts in it that you can test, but is there a second range? Let's go take a look at the hourly. I would say yes, for the fact that testing this right here, this level here, this Wiccan body, gives you all the deep dive potentials here, which makes that one range, right? And then that makes this kind of that second range. So because it does have this, interior set of moves in it, let's delete that. Let's delete this. Because it does have this interior set of moves, what you're going to see is you're going to see something come up and, you know, test this level or test in there. And it has the leg of the move and it can maybe ladder off the leg and create another interior trend off this. And then it can, you know, deep dive that, which is just getting into that 6 out of 10 where we just marked, which is going to, you know, represent the top of that. So it's kind of like a range within a range, because if this is representing the whole thing like that, you still have this little independent range here. So it's not that you have a range above this, it's that you have smaller ranges inside of it. And with this one, it's being dictated by this right here. So when you're talking about like critical levels here, like deep diving critical levels, and you're looking at the different spots a move can go. Had this not been here, had this been a bunch of blue candles, you're not really looking here. If this was a bunch of blue candles, you'd never really be looking there. You would more be looking just at the range as a whole, instead of, oh, we can hit the top of the range, which is going to be In this move, looks like the origin. I just quickly marked an origin, so this might not be the origin that's important here. I just quickly marked it. So you're going to test this candle and maybe ladder off this body and, test all this stuff in here that represents the beginning of this bigger valley, right? Like you're testing this piece of it and maybe going a little further into it, right? Like that, and then falling back. And then there's going to be that final stuff in there. So I would say there's two ranges here because of this. This makes it so that there's two ranges. If this was a bunch of blue candles, I wouldn't look at this as two ranges. I would look at it as seeing if it goes after a series of moves and then falls down. And it might still be doing that right now. But that's an important kind of separation to make, or distinction to make, where the range is split. Pseudo range within the overarching range. Yep.
You can even go to a higher time frame here and see maybe there's something else. So you've got the 5 minute here, and there it is right there, right? So you've got the hold level there, and this is the actual hold level that was hit, that creates kind of the base of the move here. So this creates the base of the move, but you can see there's a 5 minute valley here, and this level does do that. It goes straight over top of it, and it does deep dive that level. So you're going to have a very common occurrence with this, right? Like this is going to be happening to you guys all the time. So something I would expect right now is, and this is how you have to look at it. Trend is another great example of this, by the way. Trend right now, what's happening is we've got a very clear 4-hour trend on our chart. So this can happen on trends and levels. So let's just make sure we understand that. This can happen on trends and levels. So this is a daily trend that we have. And then we also have a 4-hour trend. If memory serves me correctly, it's from here to here. It was on May 24th. Is this May 24th? No, it's on May 24th. Right here, May 24th. So this trend right here. I know this because I had done a little bit of work with it before. So this is you've got two trends here, and maybe we'll turn the daily one red, just so there's some visual clarity here. We'll go red like this. So you've got two trends here, and the trends are obviously being respected, but you're going to notice it's not going to bounce straight off trend, right? Like you're not going to always bounce straight off trend. Sometimes you're going to hit a hold level, sometimes you're going to hit trend, right? Like this is a scenario here where it looks like trend, but it's actually the hold level right here, right? It's actually the hold level right there. Looks like it could be trend, it's the hold level. This one here, same thing. Is it trend or is it a hold level? Well, this actually hit trend and just deep dove it, or even that hold level. There's a little tiny one in here. It was already tested, but there was still nevertheless an untested hold level up in this region here, I think at 91.14. So this is going to be what I would expect to see. You have this level, it's untested, okay? 91.01, it's untested, but it's untested by a few dollars. Like I think you hit 91.03 here on this candle. We got to get the actual candle here and see. I'm pretty sure it was 91.03. What do we got here? 91.02, 91. So yeah, basically 91.03. This is going to be a point where in the future, you could very much come down to this level, hit this level, pull back, right? Go over top and hold this level because there's no hard close. So when you have,
I would wonder what the risk assessment would look like on this. Obviously, there's something else going on.
A level like this, the closer it comes to a hard close without hard closing, the more incentive there is to buy it up. Same with selling on targets. So anytime you have a level like this, right, you're going to see comes, hits a level, tries to hold it, breaks down, candles open like this, right? That candle closes, right? So it's kind of like, oh shoot, it looks like it's dumping. But this candle, remember, this is a red candle. We're going to switch this to red just for some visual clarity. And we'll try to find some examples of this. This next candle starts to go down this way here, and could possibly be opening like this, right? Oh, we're going to hard close a level. All of a sudden it goes down far enough and it just skyrockets up and then closes somewhere around here, right on that hold level, actually making the whole candle body kind of like this. So this is what happens is you deep dive a level because you have to watch for that hard close. If this candle was like this, different scenario, right? You've actually hard closed that level. You've actually broken down and you couldn't get back over top of it. But this is very common. And this is something to watch out for because you'll see a candle tries to hard close, and the deeper it goes into that level, the quicker it's going to also jump back up. So we're actually going to go and try to find some examples of this. I'm going to delete these brush strokes. try to find some examples of some pretty extreme knife catches. So here's one. What is this level hit right here? I believe this hits a daily right on Q. So we're going to try to find something else. What is this hit, for example? 97.95. That might be a bit too far back. Maybe we need to actually use something a little more local in the move. Yeah, what about this? What is this hitting? Let's go take a look. So I'm wondering if this is hitting this level. It actually hits it perfectly, so that's not a good example. But this is, you see, the more incentive that a level goes down and breaks something, and I'm assuming this hits another level back here. Maybe actually let's just try to find the actual level. It's not here. I'm just gonna go try to find this level. It's a pretty neat thing to see in the moment because you'll recognize it. Let me go to a 5-minute chart here, maybe. You'll recognize it in the moment. And it's pretty neat when it happens. So you'd be something very much like the base of this move here. Yeah, okay. So this right there, right? So you have the base of the move. You see, here's a perfect example. You have the base of the move right here, right? Like this is the base of the move right there, 92. And I would even wonder if it goes after a level in here. Let's go and use a replayer tool and let's cut this off right here and see if we can find the level it actually hits. Might not even be one. Got that there. This here, this is all tested. Is this one? It is tested too. Okay. So that is a tested level. Should have 2 here. Yeah, actually hits that level perfectly, so that's not a good example either. But we were looking at this one here, weren't we? What's with this candle? Is that really real like that? 1 minute candle up and down? Ah, we didn't go back far enough. Is that it right there? No, that's tested right there. We got to just keep looking back. Okay, we're going to look back even further. So this is what we're looking for here. So let's just keep going back to here. You could possibly have something here. Let's take a look. Not really. You have this, but it's not really that great. What else do you have? Let's keep going back. And let's find the actual level. So then you have this range in here, which you're starting to get into a bigger time frame. Like you've got this right here, but you're starting to get into a bigger time frame here. Like I don't even think this is going to be it. We can try it. Let's turn this green and go to a 15-minute here. Turn off the replayer tool. See where we end up. Okay, that's the level. Looks like it was testing. Just doing this on the fly, so we're trying to find the level here from the past. We can get rid of this one here. That's fine. We can get rid of that one there. We can start to actually look at the level. Yeah, this is a perfect example because here's a scenario where you see a level is starting to deep dive and it doesn't actually close underneath, right?
Yeah,
so
I wonder what other level it tested
typically
there.
what you'll see is you'll see the candle kind of close like one like this, and then it goes down and skyrockets.
Typically, when you see this kind of deep dive, what happens is that, yes, you can in the moment get a level tested right here. Like if this truly was a 10 out of 10 where this blue candle touches, you can't see a candle start to go down. It starts to stall out, comes back up a little bit. And then, you know, you see entries going like crazy, like shorts starting to exit, things like that happening. And you can have that hard close back over top 1 minute later. Like you can have that. But typically what you'll see is, for the most part of it, this is going to be something you missed in your risk assessment, a ladder point off an interior range or a trend. Again, it can be a scenario where you start to go down into a move and the move is failing, and then all of a sudden volume comes in and you don't hard close. That's always, and then you get that kind of launching, right? But
this is very common
level
as to where it looks like a level is breaking down. But this is kind of where that nerves of steel comes in, right?
Doesn't
When
mean
you
doesn't mean it can't though.
understand that the hard
It just means in the past where you justified all these moves hard closing and saying, oh well, it just didn't quite hard close. I think if you took 10 of those scenarios or 100 of those scenarios, 8.5 or 85 out of 100, you'd be able to justify differently now with understanding risk and how we look at risk, instead of just saying, oh, it didn't hard close my level, because that is the criteria afterwards that matters. So the criteria after the move matters, after it's been properly risk assessed, is saying, oh, yes, well, it didn't hard close my level. And that's great after. But the before moment, like we talked about earlier in this month, this arc of this move here, this back half of this move, or this back arc of this move, that's going to say, okay, well, this was the 8 out of 10 or the 9 out of 10. And then there wasn't one more final moment, 10 out of 10, which is down here. But because before it would have just been, hey, okay, here's a move, it didn't hard close. But to take your 100 samples of that, of what you had thought about it prior, and probably 85 of them are hitting a deeper risk part of the move instead of just going up and over. Because again, the criteria kind of becomes, if this is the final level here, right? And 9,200, say this was the final level in the move, it has to hard close over it, but that doesn't mean it's the 10 out of 10, right? There could be a deeper point. So that's important to note, and important to realize that back half arc of the move doesn't have anything to do with that front arc of the move there, that front half where you have the hard close over the level. It means it's held the level, right? But that back arc dictates where it can go, and that front arc dictates which level it has to hold.
hard close is just that crucial, that you have that level that will hold it up. And until there's a hard close, you're not actually going to be failing this move. So it's very common to see hit the level.
I think I just
orders don't come in, like you get a small bounce like this, and then the move completely fails down. So like a lot of people, what they will do is they'll do one of two things. So you go here in the move. People do one of two things. Okay. You either have people trying to catch a knife on this level. You have people looking for it to hit this level, create a little hold, and then buy here. So that's number two. So number one is right here, buying right on the level. Number two is buying on the hold that it creates, because they want to see, and what would be the purpose of number two is they want to see the move get hit and respected, so it doesn't go down and liquidate them, right? So they don't want to see it like go straight through the level, liquidate them. So fine, this is feasible too. You have the second type of buy, which you can create here, which is hitting the hold level. And number three is the hit this level, kind of linger around, fall straight down, and the further it goes, it's kind of like, oh, if the level's 9,200, maybe it goes down to 9,162, and they buy at that level, because the faster it goes down through that level, the more likely it is to come up, as long as there's not a hard close. So this would be the number three somewhere. And there's no level you buy in here. There's no specific piece that you buy in here. There's no, oh, this is a second hold level, or, oh, this is possibly, the piece of the trend. Those trends, they still exist, but that's not what you base this buy on. You have to base it on just kind of, it's moving through the level too quick. There's going to be a point where it rejects and just goes straight up. So obviously high risk, high reward playing number three. But again, three different ways to play the same move. You either knife catch it like this, number one, you wait for the bounce hold level, number two, or you buy the knife catch actual, number three. And then this is broken up into a few different groups of people, because people will buy above number one. People will say, oh, it's going to be a knife catch. So number four, which would actually be technically number one because they're the first in line, number four would be people front running the level, and then number five would be people trying to deep dive it. So you kind of have three spots where you buy. You either buy right on the level, you front run the level, or you deep dive the level.
This is a very simplified version of our risk assessment, but this is kind of how the way you see it from zero is.
So you kind of have this marquee of different situations where you can actually make that buy. Oops, we went too many candles here. So in this case right here, you'd have people who are buying on the actual level itself, and people who are front running it, buying that first piece. And then it's like, okay, well, fine. Level gets hit. It looks good. It looks like it's knife catching. It actually deep dives and still holds the level. So you can see here, it's actually confirmed that the level is holding, right? So then it creates a hold level. And then the next set of orders would be if it actually did inside of this one candle come back and hit this hold level here. So in this scenario, every single 1, 2, 3, 4, and 5 here gets filled. So everybody who's trying to buy this level in one way or another gets filled. People who are trying to front run it will often get liquidated on a move like this, right? Like this is very common. So if you front run the level too much, there's an absolute liquidation here. 50%, very close. The point where it spooks a lot of people out, right? And that's kind of where the number 3, these people who are trying to deep dive the level, that's kind of where they come in and say, oh, well, like this makes a lot of sense to just simply, the level is holding, right? It comes straight up. The level's holding. Yeah, looks like a good point to buy, right? We can find another example of this. So let's just pick kind of another random spot. Like, what is this targeting? Okay, well, it's obviously targeting something in here, right? Let's do the trail of the move here. You've got this right here. I don't think it touches that. No. I might have to go to a bigger time frame to see that one. You'd be something like this level here never gets tested. That's the backside. So now you're right here. This actually just hits the base of the move. There's a good example of it right there. So let's see what happens here. You have a hold level here, right? Like what actually happens? Where is it? Right here. Yep. Oops. Greediest part of the level. This is kind of a perfect example. You see the level comes down, it tries to break, and it falls straight through. The only difference here is this one hard closes a 1 minute, but again, I would just simply go back and say, well, here's a 3 minute level here. Does it actually hard close? No. And you could actually be on 5 minute level, which is here, right? And the higher time frame, yeah, you're somewhere between the 5 and the 1. Yeah, the 5 minute and the 1 minute are the same level here. They're the exact same level. So you can see it here where you have the 5 minute doesn't actually hard close this 5 minute hold level. So this is a perfect example where this hold level is still held. It just, the level gets deep divin a bit, right? And so fine, how much do you have here? An extra 27%. So this is super common. Without the hard close here on the larger time frame that creates the level with alongside the 1 minute, you don't actually get a close on the level. So the deeper this level will go, the more likely it is to actually break its move back the other direction, right? So this is called deep diving, and we can, just keep looking for examples of this. Like this looks like it does it here. Actually, this looks like more of a knife catch, but we can see what happens here. You've got this here, and even maybe one lower right here. That's kind of a wonky level. And maybe there's something inside of here. This will be a good one to do as well. Let's try to find the 1 minute here. Yeah, okay, it's right here. 1 minute level right there. So is there nothing else? No, there's nothing else. 1 minute level right here. I wonder if there's another time frame here as well. Nope. Actually right here. You can see it right there. It's a 3 minute base, which is fine. So there's a 3 minute base there, and then there's this one here. So let's do this one as well before we continue. So you have that same 3 minute right there. It creates the backside base right there, giving this the 1 minute greedy, right? Should be above this. So we'll mark this a different color. Mark this one orange. Right, so let's do the 2 orange levels first, and then we'll come back and do this level after. So here's a scenario here where you have a 3 minute backside that's actually created a hold level. So technically you should be holding this piece of the move, right? Like technically you should hold this piece of the move. Let's see what happens. So technically you should hold that piece. See, like you should either hold this hold level and it'll keep moving it down, because this one, it's not the level, right? Like that level is already hit. It should already be laddering the move down. So you can see this is a perfect example as to where you have a 1 minute level that's going to move this thing down, but it hasn't hard closed. Even you can have this candle right here can even open like this, and it can be one more candle and it starts to go like this and it goes crazy, and then it just rips down the other way because there's no hard close yet. So again, this is a very common practice. And then you look at this and you say, oh, how far is this level? Like 0.25. It's around
That's
that
not that much.
0.3%.
25.
So
when I see this 0.25, I would assume there's over 20%. Now, this is just an assumption. It's not a rule of thumb. When I look at this and I say, oh, 0.25, 26, 27, somewhere around that 0.3 mark, there's likely a level that was missed off of this 95.42. If you're 10, 11, 12%, sure, maybe you hit your final level, had a little bit of bleed through before the hard close back down. But with this move here, I'm looking at this and I'm saying, okay, well, 0.25 there from this level, 0.25, there's likely something that was missed there.
You have
It becomes a good call for, hey, I need to go look at my chart because I made a mistake.
this deep diving of a level that continues to hold, right? So this is what I mean by you're going to have a level that pushes right over and it doesn't hard close. So this is something that's really important to know, not only when you take trades, but when you are looking at trades, because in the case today that we're looking at this level at 9,100, and we'll go back to that, I strongly feel like it's a level that will hold, but not at 9,100. It looks like it's going to hold its level from something like 90.60 or possibly 90.40 or 90.50, right? Like it looks like 9,100 today is going to hold that level, will quite indeed hold, but it's not going to hold at 9,100. And the reason I'm saying that is 91.03 was the lowest it went before, and the level's at 9,100 even. So technically it's an untested level, just like this is technically an untested level. Like $3 away here. What is this? $9 away here, right? But again, the level gets deep divin and then completely rejects the other way because it's an even stronger form of a hold, right? And then so this top level actually doesn't even ever get hit. So this, what should have been the greediest point in the move, never even gets hit because it actually has a hold level that has to get hit before it. So you look at this and you can say like, okay, well, 91 can get hit. And here's another good point to this too, is that when you look at this, all of a sudden it becomes smart to front run this level even more, maybe even by $10, 97.04, because there's two hold levels in front of it. So this is a case where you have the measurement here is probably about 0.4. Okay, 0.33. And then so 95.73. So maybe like 95.65 would have been a good buy here. So 95.65 would have been like right here, because it can still hold this level while it's going after this level, and it can just completely pull back like that. And then, the same kind of thing happens here. So let's delete those two. Let's keep those two actually for our example a little later here. You have this level here, which should be this level here. So you're just kind of following the trail. And the problem here is this one's kind of hit already. So this range is hit. So we can't use that range. So you can't use this one here, right? Because you've got this hold level here. It's not hit, but the range is, right? So this is actually already tested and you have nothing below it. So then you kind of have to be right here, and there it is. So here's your hold level. There it kind of deep dives over top of it. So then you're kind of here, right? You're following the trail of where this move could possibly be. So that's hit. So then it goes to here, and that's, right here. That's fine. So it's still just trying to break over this level. So you actually just ladder off of this. This is another form of deep diving a level. It's just laddering off of this. So if it was to have a base of a move, it would be on a higher time frame here. So we can go and we can find the base of the move. Kind of doesn't really look like it's on the 5 minute, does it? We could try the 3 minute. I don't think this is a long enough move to have a 15, but we can also go take a look at the 15 minute. There's not really any real base here, is there? Maybe there is a 15 minute. Yeah, there's a 15-minute base here, right there. So actually, the 15-minute is a base because there's no 5, there is no 3, but the 15 is pretty clear. And so it actually does deep dive the 15 pretty far. So this is completely expected. So when you have like base of a move like this, and you're looking at the time frame it was created on, you can see that is a time frame it will need to close on as well, right? So you can't justify it on the 1 minute, you can't justify it on the 5 minute, you can't justify it on any of these other time frames. And this is like the perfect spot to see where that can happen on a 1 minute candle, or it can happen on a bigger time frame. So we actually picked a pretty good spot here to view that. And this is the same thing. It's not hard closing the level that the base is created on. Now this is a little different outside of a 1 minute hold level, greediest point, right? But again, this is now the base of the move. You can see, and there's no other clear levels. It actually trailed all the way down from, I believe it was somewhere in this point here, and it trailed to there, and then it trailed to here, and then it trailed to here. And then so fine, you finally have this little piece right here, and it breaks over top of it, but it rejects the other side, right? So yeah, very much expected.
kind of like this cycle of expectations. And so when I worked with Matt, it was easy to see that trading can go in cycles. Like, I don't know how to say this, but trading can go into these positivity and negativity cycles where you're in this trade, right? All of a sudden you're making 3 and 4 and 5 good trades, 6 good trades, whatever, any amount of good trades. And it can just take kind of one bad trade to reset your mind into this space where you're I don't know, let's move forward a bit in the move. You make all this crazy profit in here, and then you take 1 or 2 bad trades in here, and then it kind of resets you back into the funk, because trading is very emotional. It's like that. When things are good, man, it feels like $1 million. It was like, yeah, you feel like $1 million. You're making money. Everything is good. Life is glowing, right? Like there's no worries in the world. All of a sudden you get into a few bad trades. And that's the hard part about trading is that those few bad trades can quickly snap you into this alternate universe where everything is just garbage. It's like, oh, I'm not meant for trading. This isn't good for me. So I think a lot of people face that shift. And I think it's not just Matt, because I know, like, I face that as well. It's not just Matt, it's a lot of people face that shift. So next month, what we're going to be doing is we're going to be focusing more on the getting together as different groups. And what I want to do is I want to record it on GateX as well. So I'm going to be doing it live this time, which is going to be neat, because you're going to be able to be in your own group, doing your own TA with 4 or 5 people. We're going to be breaking into all the different markets. So we're going to be doing setups in all the markets, looking for opportunities. And then you're going to be able to watch me doing it on GateX with all of the groups. So you can watch on one screen or listen on your phone, or however you like to do it, whatever your flavor is. And on the other screen, be with your group working through some of these opportunities. Because group 1 might be in stocks and be like, oh, here's ONTX. Look, ONTX is breaking this crazy trend. Where do we take a trade? What makes sense here? What do we want to see for confirmation? Do we want to see it go back test, hold this 159 weekly level? And if it does that, it's going to be breaking some pretty crazy stuff here, because it's got some pretty interesting moments coming up that it could really launch over and have a crazy move on ONTX, right? Like a lot of stocks right now are in this kind of moment where we want to make sure we don't miss, because a lot of them are starting to go into this pretty crazy recovery mode, or getting to these levels that I had been looking at for like the past few years. You know, pick some random ones here. What about RDKA? Where is this one? We don't have any work done on that one. Tesla went all the way down to 700. Yeah, 800, and now it's at 900. Just pick some random ones. IBIO, I don't think a lot of these are like 2-year-old charts, so I don't have them. Some of them are hitting targets pretty perfectly, or coming up to pretty close to targets, where they're going to be hitting stuff like this, like AMSC, the Peloton maybe. Whoa, Peloton really sunk to the gutters, huh? AL up maybe. No, I don't have anything on AL up. I remember that was a relatively new chart. Acer came down to the, oh wow, Acer came, oh no, this is older now already. Acer's trying to break this trend. Oh, this would be a nice one to look at here. Back down to the 220 mark-ish kind of thing. So I think, oh wow, here's another one. See, Proton Labs, right down perfectly to 48. ES1, what about ES1? I remember this is a super old chart, ES1. Oh no, that's Minis Futures, of course, what am I talking about? I never use it. S4, what about S4? Did S4 ever come down to some pretty crazy levels? It's coming down to crazy levels, it's coming. So yeah, I think there's a lot of opportunities in different markets right now to make money. And not to just be stuck in crypto. And it's okay if you're just in crypto too. You can just trade crypto. Like, you make a very rich living off of crypto, but I don't think that's a reason to just not trade other markets, or at least to be aware of what they're doing and to start thinking about, you know, going to your bank and saying, hey, I want to open an investing account. So that's something I'll talk slightly about today. Just as a quick note, I've talked about this a few times in the past, but if you are trading, I highly recommend doing it directly through your bank account. Like, my setup looks like this, okay? I trade an investing account through my bank account. Different banks have different names. They call it your investing, or direct investing, or bank investing. They all have their own kind of coined names, but really all you have to do is we'll just say, you know, this is another 3 days, right? This is another 3 days, and then another 3 days of bad trades after. Now this isn't exactly what happened, but I'm just using this as an example. It wasn't 3 days, 3 days, 3 days, but if this is good and these two are bad, you can instantly say what was happening here that wasn't happening here, or what had happened here that wasn't happening here. Was I preoccupied with family because we have a family event? Was I in a bad mood because something had happened? Did I not get enough sleep? What had happened where these 3 days here were so terrible, and what was the difference between those 3 days and these 3 days, where these 3 days were so good and these 3 days were such good trades? And then what had happened here where these 3 days were so bad once again? So working through some of that stuff too, to say, okay, we've been able to successfully create like this kind of 3-day amazing trades. How do we now go and repeat that process instead of just kind of freely trading and saying, well, here, like this, just take these out completely? What had happened here? Because if we can pinpoint the differences between this sample and this sample, you can start to reduce these things and then replicate and recreate the good days, which is really going to set you up for success and give you like your kind of perfect schedule